Welcome to the Payments Perspective Podcast, where we help you to navigate your payments journey one episode at a time. We bring together industry leaders to discuss timely and relevant payments topics and explore the most important issues impacting our industry. The Payments Perspective Podcast is brought to you by Wespay.
Welcome back, everyone, to the Payments Perspective Podcast. My name's Jim Petkovits, Vice President of Events and Education here at Wespay. Today, we asked Dan Wood, counsel from Pillsbury Law, to join us again because we're going to dig a little bit deeper into cryptocurrency and take a look specifically at the Genius Act. Dan, in case any of our listeners missed part one, can you tell us about yourself and Pillsbury Law?
Certainly. As you said, I'm counsel at Pillsbury Winthrop Shaw Pittman. I've been here for about 8 years. Before that, I spent about 7 years working for the Texas Department of Banking. So I work in the financial regulatory space, mostly working with payments and related regulatory issues along those lines.
So for everyone who's listening for the first time today, in part one, we talked about the different types of cryptocurrency. We first talked about altcoins. That was what we spend most of our time on. And that's really what we think about, like maybe when we think of Bitcoin specifically. And we address stable coins. We also talked about CBDC, or let me see if I get this right and correct me if I'm wrong, central bank digital currency. And if any of our listeners on the side want to know more detail on those individually, our part one of this series can go into more detail. And so you can go back and listen to part one and come back. And we'll be here waiting for you to tell you a little bit more about those different things. But one of the things that when I went back and listened to part one that I'm curious about is centrally banked digital currency. And we're not going to hold you to this one, but what do you think the chances are of the Federal Reserve ever issuing a CBDC?
The short answer is very slim. At this time, at least, it's a very low chance. President Trump issued an executive order like right after taking office in January about digital currency generally, but it included a section that essentially prohibited the establishment of a CBDC. And shortly after that, Senate Republicans introduced a bill that would change federal law to prohibit the Federal Reserve from issuing a CBDC. The last I checked, that bill didn't seem to maybe have legs, but the overall indication is that there's strong opposition to CBDCs. So at least for the foreseeable future, I don't think we'll see one in the U.S.
So primarily then from an industry's perspective, we're looking at the altcoins like Bitcoin, and we're looking into and talk today more about stable coins. What would you say from like the volatility issues in cryptocurrencies? What really impacts the everyday use of this as like a valuable payments method?
You already hit the nail on the head. The volatility is the biggest hurdle, right? For anything to work as money, we talked about this in part one, it has to be a medium of exchange, a store of value, and a unit of account. And all of those are sort of tied to a certain amount of stability. Otherwise, it doesn't really work in those three roles, which means it's not very good as money. Bitcoin is the 800-pound gorilla in the cryptocurrency market, and it is valuable enough that it can be useful as a payment method. But at least in the US, where we have a stable financial system and a stable currency, it's still not as useful as fiat currency for regular everyday payments, right? And the altcoins are much more volatile. And so it's really hard to spend $10 on an altcoin today, and then that's worth 3 cents tomorrow or worth $20 tomorrow. So it's really most cryptocurrency that is not pegged to any real world currency, in the US at least, is mostly still just for investment purposes rather than everyday use.
What would you say, what advice would you give to a financial institution in general about cryptocurrency?
It's probably not advice that the financial institution wouldn't already have thought of, which is mainly that you need to be aware of and educated on all the risks and rewards. This isn't something that you can just decide you're going to do custody of cryptocurrency for your customers on a whim. Financial institutions need to understand the technology and how to secure wallets, how to provide custodial wallets and things like that. So basically, it would require building out some of your operations and compliance functions a little bit more than just deciding today we're gonna handle cryptocurrency.
So, like any industry, know what you're doing before you start doing it.
Pretty much, yeah.
Yeah, I think you're probably right. Most of our members would have had these discussions, but I think it's also really important to get the difference between these different types, understanding, what is an altcoin versus the CBDC and then the stable coin. And so the stable coin brings us to our major topic today, which is what a lot of people have probably been hearing about, the Genius Act. What is the Genius Act? And this is a big question, so I'll give you a lot of time. What's the Genius Act and how is it going to change the industry?
So the Genius Act is a bill in the Senate that would create a regulatory framework for what they call payment stablecoins. And just to back up for a second, for those who didn't watch the first part of this, a stablecoin is basically a cryptocurrency that is pegged to a reserve of assets, basically meant to keep it at a stable value. At the moment on the market, stablecoins can be pegged to other digital assets or a portfolio of different assets. The most useful, though, are pegged to one-to-one to real currency, like Tether, USDT, is pegged one-to-one to the US dollar. So a single USDT or Tether is always worth exactly one US dollar. And that solves that stability issue that we were talking about earlier, the volatility of cryptocurrency. So at the moment, it's a little bit like the Wild West. Anybody can try to issue a stablecoin, and the regulatory picture is very unclear. For instance, the SEC viewed all stablecoins historically as essentially securities, and they regulated this through enforcement action. So there were no regulations. They would just do an enforcement action against somebody who issued one. But it's also unclear whether it qualifies as money or maybe a commodity or, fits within money transmission or banking regulation. So the Genius Act would essentially create this regulatory framework for payment stablecoins. It's important and it's big news because it has pretty broad bipartisan support. In fact, when it passed the Senate, it passed by a 2-to-1 margin. It's also worth mentioning there is a very substantially similar House bill called the Stable Act that proposes a very, very close, similar type of regulatory framework. Since the Genius Act was passed the House and the Stable Act was already in the House and had passed out of committee, I can't predict exactly what's going to happen, but probably one of two things. Either the House will move on its version, the Stable Act, and then the House and the Senate have to negotiate a compromise bill that kind of merges the two. But since they have so much overlap, I would think that wouldn't be too hard. Or the second course might be that the House simply takes up the Genius Act as passed to it by the Senate. In any case, I'd say there's a pretty strong possibility that some version of this will become law later this year. As I said, broad bipartisan support. There were some objections over how well it prevented officials from essentially issuing their own stablecoin and making profits. And that was really the only major opposition politically. So I think that this will probably become law.
I recall stablecoins today without something like the Genius Act claim to be tied to a specific asset, but I recall a coin a few years back that marketed itself as a stablecoin and collapsed and was definitely not as stable as marketed. Is that so? The intent of Genius is to maybe prevent this from being as common?
Exactly. You're referring to the Luna coin, where because the term stablecoin by itself is not a legal term, there's no consensus on the true definition. So other than it is intended to be more stable because it's pegged to some sort of asset. In the case of Luna coin, it was what they call an algorithmic stablecoin. It was pegged to basically a bundle of other digital currencies. And when one of those, the value dropped out of the bottom, that led to instability in the stablecoin. So the Genius Act focuses, I mentioned the phrase earlier, it focuses on payment stablecoins, making a distinction between some other type of stablecoin that is not intended as a form of payment or settlement. So obviously the intent here is to create a trustworthy, safe and sound payment mechanism. So it basically would define a payment stablecoin as a digital asset used primarily for payments and settlements that is pegged to a fixed monetary value. And then in addition, it would put strict restrictions on the reserve assets. Specifically, it would have to be a one-to-one reserve of US dollars or similar things like treasury notes and treasury bonds. So it would create a pretty narrow type of stablecoin, and only properly licensed and permitted issuers would be allowed to issue payment stablecoins in the US.
So it's like port wine can only come from Portugal. It'd be kind of the same thing. It would give a focus and say, when we're doing this is what a true stable coin is. And you can't call yourself a stable coin if you're not, in fact, defined under these terms.
Essentially, yeah.
One of the things that kind of is coming to my mind with issues related to things like FedNow and RTP is they're not really capable for international transactions. They are solely domestic transactions, where RTP is kind of dipping their toe into the international entries. Is there the possibility now with a stable coin and the fact that this is ubiquitous technology, that it's open technology, will this open the doors for the possibility of better functionality for international transactions?
Absolutely. Faster and cheaper international transactions. And in fact, things like RTP, FedNow, same-day ACH, all these faster payment methods, at least within the US, the starter pistol for all those efforts was Bitcoin, because all of a sudden blockchain-based monetary value could go from the US to Spain in about 5 minutes, and it has cleared and settled. There's no 3-day settlement process. You don't have to connect FedWire to Swift and all of those extra pieces. There are no middlemen. It just happens on the blockchain, because the blockchain is, as we discussed last time, it's a global peer-to-peer network of computers. So there's nobody in the middle, no gatekeeping, which creates some risk. But that's why a sort of regulated stablecoin is a solution to that. It gives you that blockchain cross-border ability, but with the safety and soundness and consumer protection of an established governmental financial system.
Does the Genius Act in any way discuss issues with OFAC regulations, BSA regulations, or is that something that the industry would work to alleviate? I mean, if I want to send money, you got to make sure I'm not sending my stable coin transaction to North Korea.
The OFAC regulations are going to apply to anyone doing business in a transaction across borders, right? So it's going to apply no matter what. Additionally, in terms of like Bank Secrecy Act, AML, those sorts of compliance issues, the Genius Act would specifically cause an issuer who is properly permitted and regulated to be a financial institution under the Bank Secrecy Act. So the Genius Act doesn't directly apply that, but instead it just makes all of the BSA obligations applicable to anyone issuing a payment stablecoin.
Which would not be dissimilar from what we would see in FedNow, RTP, ACH. They all don't specifically say you must comply with OFAC. OFAC is, you have to comply with OFAC because you got to comply with OFAC, and you got to comply with BSA because you got to comply with BSA.
Right, exactly. And other consumer protection measures, there are some in the Genius Act, like data privacy obligations, public disclosure requirements, and things like that. It does not have necessarily the same types of like error resolution and unauthorized transfer protections that, for instance, the Electronic Funds Transfer Act and Reg E have. But as an aside, there's a case going through the federal courts right now exploring the question of whether federal wire transfers should be covered by those protections under the EFTA and Reg E. And there's a possibility that those protections could be applied to stablecoin transactions under the EFTA. So some of this still needs to be ironed out, but the bottom line is that there should be additional consumer protections.
So is there anything that you wanted to say about the Genius Act our listeners should know?
Just at a very high level, it would be very similar to current banking regulations. So it does have a provision that essentially allows for non-bank institutions to issue stablecoins. And that right now is a little bit of a point of contention, as you might imagine. Some of the banks don't necessarily want to include non-bank entities in this. There are some questions about how well regulated the non-bank entities would be compared to banks. But at least at the moment, we're looking at a system that you'd be licensed generally at the federal level, but it does allow for a choice of regulator at the state level if the institution is below $10 billion of capitalization. So for smaller financial institutions under this framework, you could be regulated at the state level, kind of similar to banks and how the CFPB operates. And it has some pretty strong restrictions on the reserve assets, as I mentioned, but also creates like strict audit requirements. There would be examination, supervision, and enforcement from the regulators, very similar to current banking regulation.
Those all sound reasonable. I mean, to come to a conclusion like we need to control this monetary asset in a way that makes people feel more comfortable utilizing it. So it doesn't seem terribly shocking. Anything you wanted to add in before we kind of close it out?
No, that's the gist at a high level. Just be aware that things may change a little bit in the bill as it makes its way through the House. Right now, we can look at the Genius Act and get a pretty good prediction at a high level, but some of the specifics will likely change before it comes out.
Dan, thank you so much for coming back and joining us a second time. I really think this discussion into the Genius Act is going to be a really valuable topic for our members. I know I learned a lot. I also want to let everyone who's listening know that if you would like to contact Pillsbury or Dan to help you develop your cryptocurrency policies or programs, their contact information is going to be available in our in our podcast description. And I want to thank our members and our listeners for joining us today. If you're interested in becoming a Wespay member, you can visit the membership page, which is also available in the description. And you can subscribe to the Payments Perspective podcast anywhere podcasts are available. Please join us next time as we continue to work together in shaping the future of payments.